Hello everyone, Corey Mitchell here with TradeThatSwing.com, and this is your swing trading stock market outlook for the week of December 23rd. Happy holidays. This will be the last update before Christmas. So we do have a early stock market close on December 24th, and then markets are closed December 25th. So a shortened trading week this week. It's been interesting. I have absolutely been loving day trading the last few days. The just movement, even before that, there was just loads of movement in some stocks, and just huge movement the last few days. Been really fun to trade. As for swing trading, as we discussed last week, there were already issues, and those have continued to play out. So basically, no, I'm not interested in taking any longs until I start to see some more the health indicators improve. So we're going to talk about that. So right now, the basic summary is stock market conditions are poor. Bitcoin, I don't like here, and gold remains weak. So none of those present any potential interest to me. We'll talk about why and what would change that. Best swing trading stocks list for December. That's high momentum stocks to the upside and downside. So there's a list of high momentum stocks that were running higher, and stocks that have been running lower. This one, the buy the dip stock list, I'm going to try to update these fairly soon, just in case we do get a bigger decline. To be honest, I don't really consider a 2% drop in the S&P. Is that about what we dropped? Maybe I think we're a couple percent off the highs. Like, that's really just kind of a normal type 3% off the high. That's a pretty normal movement. I don't even really consider that a drop or a dip. Dips are more, get into that 8, 9, 10% area, and then it declines once you start getting into that 20%. The terms don't matter, but this is just a nothing so far. But at the same time, I still listen to my health indicators, and they say, hey, when is it generally easy to make money? And when those health indicators are in good shape, that's the easy money. Right now, when those health indicators are saying, hey, there's something going on here, which we're going to discuss, there's definitely a few things quite interesting in the market right now. So let's get to those. First, we'll just look at the price action. So we talked about this last week. The NYSE had already declined into this area while the NASDAQ was up here and the S&P was up here. They have turned lower along with the NYSE and the Russell 2000 going even lower. The Canadian index was kind of holding up here. It plunged off. So we had already seen a bunch of divergence, especially a big index like the NYSE Composite. Very broad, lots of stocks, different prices, different industries. A little more, broad than the S&P and the NASDAQ 100. So these were holding up okay, but that could just be from a very selective group of stocks, big ones that were holding up okay. But the kind of average stock was, not doing so well already, and that was from last week. And so this is no longer in an uptrend. Like, whether you thought this was a major swing low, this one was a major swing low, it doesn't matter. We've taken both out. I would consider that kind of the last one. You have this pretty rhythmic movement up. That was the last low. This was the last low there, that one. So the S&P is just kind of hanging out near that prior low. The NASDAQ is just above it. So NASDAQ's still in an uptrend, just because it was a bit stronger earlier before the decline. The Canadian index, that was a little swing low there. It's dropped below it. So this is, kind of hard to ignore. I would definitely want to see some bullish action in any of this before starting to get involved again. Gold, just ugly. This is the miners just plunging, new swing lows. Gold hasn't made a new swing low yet, but it's still, bearish for the moment. We did clear below these little lows, so until it starts building up again, there's no real reason for me to consider a long at this stage. Bitcoin did make its move above 100, and what I was looking for, we've discussed for a couple weeks now. I want to see it move above, have a pullback that holds above that 100K level, and then starts moving up again. We did not have that. We moved up, waiting for the pullback, and it just dropped right through. So that's still the case. It's got to move up. It's got to hold above that level. There are other options. If this plunges down and then bounces and stays below this level, that's an interesting possibility for a short. And then, of course, longs, if we drop, then we can look for long setups potentially, but it would still be on the bounce up. I would be looking at this area and seeing how it would react around there. So nothing of interest right now. It's either got to drop for a possible short or to set up new longs, or it's got to rally from where it is now up and then hold above this area. At least for me to be interested. State of the market health indicators. So this is interesting. Let's drop down to this one first. So this is the number of stocks above their 50-day moving average. So we had talked about how the S&P was kind of holding up near its highs here last week, but the number of stocks was already in the S&P pretty low, below their 50-day moving average. And now we only have 25% of stocks in the S&P are above their 50-day moving average. But if we put a 50-day moving average on this chart, the S&P 500 is basically sitting at it, which is what I mentioned a little bit before. The index is weighted toward bigger companies. So if a few of those big companies are holding up okay, that holds up the index, even though everything else might be declining. So we have a situation here where the overall index is sitting at its 50-day moving average, but only 25% of stocks that compose that S&P 500 index are above their 50-day moving average. So like only a quarter. That's, not a lot. It shows the index itself is painting a very different picture than what's going on within the index. This is up volume divided by total volume. That looks like a big spike. It did not hit the 90% level, which would be required to make it important. This is still a neutral. We need either extreme readings down here or extreme readings up here. I didn't calculate this. This was also very close to 10%. A manual calculation may show that it was there. Either way, because it was such a large drop anyway, it triggered this, which says it's bad. So it would have basically just given a confirmation that this is bad. But this, always I step aside. This is the daily percentage movement of the S&P 500. Uptrends are characterized by lower movement. Anytime we get a 2% drop, it's a warning to at least stay away for a couple days for swing trading. And I found that hasn't really caused me to miss out on much overall. And you can see during downtrending periods, you get more of this action. This was actually an overall bullish period. If you go back in history and look at downtrends like 2022, you just see lots of this. And so it just says, hey, you're in a volatile environment, more likely in bearish conditions, be very careful. And we got one of those big drops, and we have not recovered from it yet. So this is still a frowny face. Volume, not important to me at the moment. It looks like there's a big spike there, which people might say is bullish. That was simply because of options expiry. It occurs regularly. So those big volume spikes, unless you would study that specifically and find some interesting thing about it, it pretty much means nothing to me. The NYSE advanced decline line. This one's also a frowny face. It is, you can see here, has dropped below this low here. Equivalent on the S&P 500 would be this low here. So it is still diverging. We had talked about this last week. It was already dropping. It had dropped below these levels while the S&P was still up here. So basically that indicates like, hey, the price could drop to this prior swing low unless that situation rectifies. It did not, and the S&P did follow through. We're still kind of seeing this where it's taken out these other lows, so there maybe could be some downside, at least based on this indicator. I don't like to think too much about the prediction, but it is, to me, it just says, hey, it's not great conditions, back off on longs. So pretty much everything not good except for this one, which is neutral. There are some stocks that are performing well in all this. Like we said, those indexes had been holding up even though a lot of stocks were not doing well. So if you had picked the right stocks, maybe you did okay. If you were in some of the wrong ones, it was a tough few days. Like I said, day trading, huge movements. So there is some potential for short-term trading for sure. Always, we can always day trade. We'll talk about that in just a bit. At the bottom, I always put, I like day trading because you can trade those opportunities every day. There's usually always something to do. Whereas swing trading, we go in this, at least for me, I definitely have these periods where I'm not trading and then I'm aggressive because if market conditions aren't right, I don't want to be holding trades overnight. So, yeah, lots of opportunities in the short term. You can see these huge moves that some of these stocks were making the last few days. Sector performance, I just put it on here, but basically everything's not doing well recently. Consumer cyclicals and technology, pretty much the best on all these time frames over the last week. They're near the top. They dropped the least. 1 month performance near the top, 3 month performance near the top. And so what I'm doing right now, enjoying the volatility by day trading. No new swing trades in stocks. I should say no long swing trades in stocks, Bitcoin, or gold. Continue to deteriorate. Short trades are possible. And yeah, the day trades every day, whereas swing trading periods of inaction and inaction. So if you kind of want that daily dose, then maybe day trading is more for you than the swing trading. You can check out how I like to trade in these things here. If you're wondering where this article is on the website, it's always under stocks, stock market analysis and trades, and it gets updated each week. So happy holidays out there. Enjoy the movement. It's definitely a fun environment out there, but also definitely some time to be a little bit cautious as well on the longs.